2 of the last 3 sessions, the market is down. Is the bear trend back, or maybe it's just a little head fake and the bulls are about to come back? Find out in this update for July 27th, 2022. Let's go. Hello, everybody. It's Jeremy Whaley here from Trade Maestro. You can find us over at trademaestro.com. Hope you're doing fantastic, having a great week, as we are just a couple trading days into this week, but it's already been an exciting one. Sunday night, I did a market update, and I said bear crash imminent, or market crash imminent, I think it was. And, what do you think? Well, Monday, we didn't do a whole lot, but Tuesday, the bears came back, and maybe I was right after all. Ooh, I know some of you don't like it whenever I'm right. Let's take a look over here and see what's going on in the market and see what you think. So this is the Dow Jones Industrial Average. If you can see it, remember Sunday night, Monday morning, if you looked at that update, I talked about this reversal pattern right here. It's called a dark cloud cover. And I said that at this location, at the pivot area, which is exactly what you're seeing, we would start to see probably the trade rolling over. That's what you're seeing right now. And so Monday, not a big deal. Tuesday started to continue here. Those averages, not a big deal. They're not going to be able to support this thing. We got a little support here at 31,200, but this trend is about to roll over. An easy target of 30,000, certainly, I think probably 29,000 and beyond, as I have been saying for so long. Now, as I have said all along, the timing of, exactly how far it goes for each wave, we might be off one way or the other, but definitely from the form standpoint, in terms of structure, market structure, we're right on track with where all that's going. So you can see down here at the bottom that our stochastics is starting to make the turn. By the way, what do you think? I changed my stochastics color, so hopefully that would be a little bit easier for you guys to see. Let me know in the comments if you can see it better. But you can see that it's starting to roll over here. And that's exactly what we would expect to see at the top of the turn. Okay, so in case you're not familiar with that, let's just zoom out here. This has been a channel. This has been an excellent bearish channel here. We'll go all the way to the top here. Look at your stochastics was perfect there. It told us exactly when we were bouncing. Told us when we were continuing to trade. It told us once again the trade's going back up. It told us when this one was done. Actually told us way early on that one there. Told us when we were done down here. Told us to get back into the bearish trade right here. It told us to get out of the bearish trade, and now we're about to get the next signal for getting into the bearish trend. This trade, unless something changes, this trade is oscillating to the downside. And that's what we should expect moving forward here in the relatively near future. So probably by the end of this week, we'll see some more momentum on that. End of the day down 228 points on the Dow, 0.71%, so a little less than 1%. Now the S&P took a little bit more damage. We're down 1.18% on the S&P. That represented 45 points on the SPX index here. You can actually see your stochastics starting to roll a little bit more on this one here. Not quite crossing over yet, but definitely moving that direction. Same thing. Just really it's the same thing. I mean, it's slightly different numbers, but all in all, the form of this is really very much the same for the S&P, and we're expecting that one to continue rolling over as well. And then maybe the bigger one here is the NASDAQ, because we actually got 3 bearish days back to back, and percentage-wise, it's a little bit more. Ended up down today, Tuesday, moving into Wednesday, down 220 points. That's a 1.87%, so almost 2%. On the NASDAQ. And notice your Stokes are definitely ready to cross here. I mean, they've already made that turn. Sorry, I thought I had the full screen up here. They've already made that turn and ready to go. Had 3 bearish candles back to back. We're well below those pivot areas. This thing should be at 10,800 probably in the next week and a half, if not sooner. And yeah, I think once it drops below those levels, I've said this all along, I think once it really starts dropping below that 10,000 level, I think you're going to see massive selling coming in for the NASDAQ. So I'll do more exhaustive updates as we continue to see this trend continuing here. A couple things I wanted to address, though, before we leave, and I know this is kind of a shorter update, but I don't need to waste your time. I mean, It is what it is. There's nothing new to really add to it. So I just wanted to give you a quick update on it. But a couple of things that I wanted to address. First thing I wanted to address is a comment that I got from one of our viewers. And I'll just kind of throw this over here really fast. I don't know if you guys can see it or not. But Edgar says, crazy how charting says different things. I can't seem to highlight it. There we go. Crazy how charting says different things at different time frames. I say invest some money now. And if it drops, invest again, and it'll go up soon. Well, thank you, Edgar, for those thoughts. Let me give you my thoughts on Edgar's thoughts. I've been doing this a long time. Whenever I started trading, I had a lot of people that told me the same ideas. We learned things like dollar cost averaging. We tried to find the bottom, buy at support, stuff like that. And then if it notched down, you buy some more. And I had a great mentor that I ran into actually in the world of Forex. Foreign currency trading is where I learned this. And he taught me that if you wait until the trade bounces and moves in your direction, if it moves with the momentum, or if it moves and you buy with the momentum in the direction it's going, your win-loss percentage is going to go up exponentially. It can double, sometimes triple. Now, the intuitive thing is to say, yeah, but I bought in at a higher price. That's true. However, what if you buy in at the bottom price and it then just keeps going down? And what if you ended up with 2 out of your 3 trades? So 60% of your trades you're losing, but you're buying in at a cheaper price, but you end up with losing trades. Are your 1 out of 3 trades that are making money, are they offsetting that much? And the answer is statistically, no. Statistically, whenever I made the switch and I started buying after the trade starts moving, my win-loss ratio went up into the 75 and 80% range, sometimes much higher than that. Just depends on the week. But, on average, over everything, 75 to 80% of my trades turn into a variation of a winner. Maybe it's not maybe it doesn't go all the way to the target, but certainly turns into a winning trade. So that's the first big thing, is you just end up with a lot more winning trades. But more importantly, you end up with trades that are immediately getting into the money. They're getting into a profitable position rather than buying these trades and watching these kind of stagnant trades as they're pounding into the bottom and taking forever to get going. And so psychologically, there's a benefit to just buying after it starts moving as well. And then in my case, since I trade so many options, there's also a functional benefit to waiting for the confirmation, because if you're trying to buy at the very bottom and you're buying with an option, you have time decay that you're fighting. And sometimes you just don't have enough time to allow it to keep pounding the bottom until it finally decides to get going. So what we do is we get into these trades after they've confirmed. So that's the first part of my answer for Edgar, is I like to get into trades after they've confirmed. But Edgar, here's a bigger thing. The bigger thing is I am just flat out bearish. I'm just flat out bearish completely. It's a bearish trend. All of my trades are bearish positions. That means they're either short positions or they're put options or there's some sort of a bearish strategy. So you can say, well, I'm going to buy, and if it drops down, I'll buy some more. And I'm saying while it's dropping down, I'm making money. So maybe for anybody, I'm not just talking to you, Edgar, you just happened to raise the comment, but for anybody, you might say, well, I'm just going to keep dollar cost averaging down. Dollar cost averaging is a marketing strategy. It is not a money management strategy. It's something that fund managers came up with because people were wanting to close their funds close their accounts whenever the market went down. And so they were trying to get people to keep their money in the accounts. And so what they came up with is this really crazy strategy called dollar cost averaging. Well, if you think dollar cost averaging, always works, well, just take a look at Enron. I mean, Enron goes all the way down. In a bull market, if everything is bullish going long term, yeah, dollar cost averaging will work. But in a bear market, which is what we're in the middle of right now, you don't want to be dollar cost averaging down. You want to be out. You want to be out in cash and or taking bearish positions. Okay. So let me just come back over to our trade really fast here and just kind of show you this picture. Yes, Edgar, you're absolutely right. If you're buying on these dips here, then yeah, that's a great time to be dollar cost averaging. If you're buying on these dips on the right side of this trend, that is the worst time to be dollar cost averaging. And even worse, I'll do this in a different color here. Let's say you're buying the rallies in the bear trend. Well, that's what Bob Prechter referred to as the slope of hope. And that's what happens psychologically so often. What happens during bear markets is as we hit some sort of a support and it starts to bounce, because traders are so conditioned that the market always goes up and they're so conditioned to bullish strategies, because traders are so conditioned to that, as it hits a support and starts to bounce, they jump in, they start buying, and they have this idea that, well, if it drops lower, I'll just buy some more. Well, unfortunately, some more might be going for another 20 or 30%, especially in this case here, where the market sold off about, depending on the index, but in the case of the Dow, we're down about 20%. In the case of the NASDAQ, 30 plus percent. Well, I'm expecting it to go substantially further. So the question I would have for any of you, and Edgar's the one that raised the issue, but for any of you that are saying, oh, well, I'll just buy some more when it goes lower, how much are you willing to take? How much pain are you willing to sustain rather than just shift the strategy? Because, it's like, I always use this metaphor of winter sports versus summer sports. Summer sports are great. My kids love playing baseball. We love going to the lake and doing water sports. And those are awesome sports in the summer. But when it comes to January, you don't really want to be water skiing in January. You don't want to be being pulled in a tube behind a boat in the middle of freezing cold water in January, unless maybe you're part of the Polar Bear Club. But what do you do in January to make it more enjoyable? You bundle up, you go outside, you put snow skis on, and you play winter sports in the winter, and you play summer sports in the summer. Same thing happens in the market. So when you're in a bear market, you take bear strategies. When you're in a bull market, you take bullish strategies. And it's that simple. It's that simple. And if you don't do that, then what you're doing is you're always trying to force the market to be something that it's not. In fact, I've got a video that I'm going to be releasing here very shortly called "Who Moved My Trading Cheese?" And you're going to love that. So be keeping your eyes out for that video. But the point here is just really simple. Decide what your strategy is. And obviously you've got a strategy of buying, which is fine. There's no problem with buying until you're in a bear market and the market keeps going down. And then the question is, how far are you willing to go with that trade? How far down the rabbit hole, so to speak, are you willing to go? So I hope this is helpful for you. Thank you, Edgar, for the comment. And if any of the rest of you have any thoughts or comments on that, then please add it in there. And if you put comments in here and it's relevant, then I'll add it into my next market update, which, by the way, I'm pretty consistent now getting them out on Sunday evenings, Monday mornings, and then in the middle of the week. So if you've not subscribed to the channel, get yourself subscribed here on YouTube, Facebook, or wherever it is that you're watching this so that you can get all of those updates. And if you haven't checked us out over at TradeMaestro.com, click the link below in the description. Check us out over at TradeMaestro.com and get all of your trading education that you need so that you can profit in bull markets and in bear markets and in neutral markets with stocks, options, crypto, whatever it is that you're wanting to trade. Make sure you're prepared for all of it. All right. Thanks again for watching. Hope you have a wonderful remainder of your week, and I'll see you at the weekend here. Until then, happy trading. We'll talk to you soon.